Hello and welcome. I'm Natalie. Let's talk about money. So, today we're diving into a topic that affects each and every one of us. All of us are included in this, no matter where you are on your life journey. And that is how financial responsibilities change as you get older. So, stages of life change, and every 5 or 10 years, everything changes. So, this is what we're going to go through. So, whether you're a teenager, fresh into your 20s or 30s, or looking at retirement and, on and on. So, understanding how your financial landscape shifts is crucial for building a secure, fulfilling future, which is what we all want. We all just want to be secure and fulfilled and happy. That's the goal, that's the end goal. So basically, let's just talk about money, how we spend it, how we save it, and how our relationship with it transforms as the years go by, because it does change. The way I spend money now is much different than it was when I was 20 or 30 or even early 40s. I'm 48 now, so even as a young 40-year-old, it was different. Changes for everyone. Now, because my audience is for the most part all over about 35-ish, I'm not going to spend much time on the early years. So now, as you move into your 20s, stuff does start to change. So this period is typically marked by newfound independence. So often you have new financial responsibilities that you haven't had to worry about in the past. So you may have to pay for rent or room and board. Maybe you are going to college, and so then now you may be signing up for student loans, which you shouldn't, but maybe you are. You should get a job that pays for those student loans. But nonetheless, you do have to pay many times for student loans if you choose to go to college. You may have to pay for utilities or the internet. If you're in a small apartment, you may have to pay for all of the regular utilities that many apartments have you pay. You have to pay for groceries just to eat every day. Maybe you need transportation, so you need to buy a car, hopefully not using a car payment, but hopefully using just in the amounts you've saved as in your younger years. You could save that money and use it to buy a cheap cash car. And then also, as you get into your 20s, I believe the age that you can stay on your parents' insurance, if they have it available for you, is like 25 or 26. I think I got kicked off my mom's insurance when I was like 26 or so. So you may have to start paying for health insurance. So these are all things that need to go into a budget. So it can be kind of a shock when you realize just how much things actually cost, like rent or utilities. You never thought that you would be spending $2,000 a month on these things. But setting a budget becomes essential at this stage, because if you set up a budget, you then know where your money's going and how to afford everything that you're needing in your life. It's also a great time to start an emergency fund. So if you just start putting a little bit away each month, just a little bit, even if it's just $20, $50, $100, set it aside to start your emergency fund. The more you put into your emergency fund, the better it is. And when you have 12 months worth of expenses saved, then stop. And if it takes you 5, 6 years to do that, that's okay, because you're still young enough that most emergencies aren't going to be dramatic enough. So as you move into your late 20s and 30s, you're going to have some different obstacles. So it basically, life just becomes more complex. So many people are focused on advancing their careers, maybe getting married or think about starting a family. And each major life event brings new financial considerations, and having a budget can help you through this stage. In every stage of life, if you can create a budget on a regular basis and stick to it and keep engaging in it with it, you will be setting yourself up for success, because you will know where your money is going and where you can save, spend, and give. And that's the three things you really do with money: save, spend, and give. So during this stage of the late 20s and 30s, you probably are, well, I shouldn't say probably. Maybe you're saving for a wedding. Maybe you're saving to buy a home. You probably have health insurance that you're needing to pay for. Maybe you have a partner that now is also on your health insurance. Maybe you're starting to build life insurance or pay for life insurance that you hadn't had before, or even long-term disability insurance that you hadn't had before. And then, of course, retirement savings, because yes, the sooner you start, the better it is. So it's time in your 20s and 30s to start that retirement fund. And then also managing debt. So it's best if you just stay away from debt, because that's just the best way, because then you don't have to have that burden on you at all times. Student loans are usually one of the first debts that people have. And so if you must get a student loan, you have to now learn how to manage that student loan. If you're getting a car payment, which you shouldn't because you shouldn't, you should have saved money all along the way so you could pay a cash car. But if you don't and you have to have car payments, now you have to figure out the budget to make that fit into your budget. So at this stage, you should, begin to understand the importance of setting up a retirement account, like a 401k, for example. That becomes a priority, even though retirement feels so far off. Again, if I would have started my retirement fund when I was in my late 20s, even 27 or so, I would have had so much more in my 401k right now. But I did how old must I have been? In my late 30s, I used the 401k that I had to buy a home for cash. Not something I would probably recommend people do, but if it's an option that will work for you and you can start that 401k over again, then maybe that's an option for you. And then we move into the later years, midlife, I'll say. And that's between your 40s and 50s. So by your 40s and 50s, which many of you watching this video right now are probably in this stage. I've got some late 35-year-olds, like 35 to about 50 or 60 is my kind of age range watching my videos. So you're often in your peak earning years many times. And so with the higher income comes, of course, more complex responsibilities because now you have more to spend and you are thinking that you have to spend it all, which you don't. You don't have to do. Put it in your budget and invest a lot of it. But many are managing households, raising children, possibly caring for elder parents even. And all of this adds on to the regular burden of just regular life, regular mortgages and regular utilities and regular car insurance and all of that. So having a strong budget will help you get through these difficult times because you'll know where your money is going. If you don't know where your money is going, it will always be a loss for you, always. So usually during this 40s to 50-year-old stage, you're usually, if you have children, you're saving for college for your children. Maybe, I shouldn't say usually, maybe you're saving for college for your children. Maybe you're paying off a mortgage or maybe just getting into a mortgage at that point. And your healthcare costs typically rise the older you get. So your healthcare costs may be increasing. My healthcare costs have nearly doubled in the last 5 years. And so it does happen. The older you get, the more expensive life becomes. And then maybe you're supporting other family members. Maybe you have a spouse. Maybe you have, again, children. Maybe you have a parent that's getting older and needs assistance. And then you also want to start planning for your future. So estate planning for you. So wills and trusts and powers of attorney and all the things that go along with getting older. And this is the time for you to review your insurance policies as well and make sure that your family is protected if something unexpected happens. Now, I do recommend a term life insurance. And that's what I would go with for short term, because in the end, you really want to have the money to use in case of a medical problem. So basically be self-insured. Now, you should always have some sort of insurance because just regular prescription costs and stuff like that can be expensive without insurance. But you don't need to buy some big elaborate life insurance plan to buy health insurance, okay? It's also a good idea to regularly revisit your investments and retirement savings to ensure you're on track for the future that you want. It's important you get what you want out of life. And visit with your financial advisor, I would say 1 to 4 times per year to ensure you're on the right path to build the life that you want to live. If you explain to your financial advisor where you're going, what your goals are, they can help you get there. They can help walk through the steps with you on what to invest in, how much to take out at what point, and how much to save to get to that point. So set goals for your future and keep moving toward those goals. And this is true of all stages. Always set the goals and always keep moving toward those goals. And then the last stage I'm talking about is 60s and beyond. So basically, your golden years is what they are really. So your 60s and beyond. So this is when people begin transitioning out of the workforce typically and into retirement. And I've said multiple times that I want to retire when I'm 62. And it's going to be difficult in order to get to where I want when I actually retire. But that's my goal. So that's the goal that I'm aiming for. I have 14 years, barely 14 years because my birthday is in 2 months. So barely 14 years. But I'm going to work toward that goal. And so your financial picture shifts again as you move from accumulating wealth to basically using it. So depending on when you retire, if you retire when you're 65, when you retire when you're 70 or 75, it depends on you on when you're going to start using the wealth that you've built into your retirement plans. So basically you're transitioning to rely on the retirement savings and pensions that you've created, and you're managing your withdrawals from accounts like your 401ks or other investment plans, and you're adjusting your budget, to a more of a fixed income where you can't just spend willy-nilly because you can always make more by going and doing side jobs or whatever, which maybe you still can. You can do side jobs until you're 90 if you pick smart side jobs or gigs, as they call them these days, these young kids. So your healthcare, of course, is going to go up. Well, I shouldn't say of course. Typically, your healthcare costs go up, and your long-term care planning should be a plan. So you should start planning your long-term care, because most likely at one point in your life, you're going to need to go to some sort of retirement home or a retirement community, at least, where they come and they check on you and maybe give you medications in the morning or whatever they do, because that's a smart way to handle yourself without having to go into a nursing home, really. And during this stage, you probably are going to downsize or relocate. Maybe you want to live closer to family. Maybe you want to live farther away from family. Or maybe you just want to live closer into the city where you have easy access to everything that you need. And basically, at this stage, you're just ensuring your whole estate is in order. So you've got an estate plan set up. If you have children, you have a will to go through where anything that you own is going to. Even if you don't have a family, you should still set up a will, because maybe there's a charity or a friend that you want to give everything to. You should set that will up. You should do that earlier than this, but at the last stage, if you're at this last stage of 60 and over, make sure you have a will prepared. So it's essential during this and actually every stage to monitor your spending via budgeting and make sure your money lasts. That's really the goal, is to make sure your money lasts. Healthcare can become a significant expense at this stage. So understanding your Medicare and your supplemental insurance or equivalent programs is crucial at this stage. Make sure you are learning more so that you're prepared and there's no big surprises that you weren't expecting at this stage. So basically, no matter where you are in life, here's some universal tips to help you manage the changing financial responsibilities that happen throughout your life. So number one, something I talk about in most of my videos is budgeting. So start budgeting early and adjust often and as your life changes. Continue to update your budget on a weekly or monthly basis. Build an emergency fund. Aim for 6 to 12 months. As you grow, 6 to 12 months is the easiest way to make sure that you're covered. And this is 6 to 12 months of your expenses, your standard expenses that you have. And also invest in your future. So even if you can only put away a little bit each month, if you can only put away $50 or $100, do it. Because a little will always be more than none. If you put $0 in an account every month, your balance will be zero. If you put $100 each month, your balance will be more than $100. So put a little, at least a little in each month to help yourself out. And also just keep learning, because the life has changed. It changes literally on a daily basis. They're doing the whole big budget, big beautiful bill. And now I've lost track. The war is going on and Trump is being impeached and all the things. So I don't know what's going on. But just keep learning. Pay attention to what's happening in the finance world and how it can affect you. This is a lifelong journey. And so don't stop learning. Continue learning at all times. And also seek that professional advice. Financial advisors are here to help you. So be sure that you use them to make those big financial decisions, or even the small, regular financial decisions that you need to make. So as you can see, our financial responsibilities are always evolving. So what's important is to approach each new chapter with awareness, preparation, and a willingness to adapt. You do have to adapt in this world today, because stuff literally changes on a daily basis. By staying proactive, you can build not just wealth, but also peace of mind. I think that's what we all really want, is peace of mind and just a sense of relaxation and comfort with ourselves. So knowing that you're ready for whatever life throws your way. And if I can ask you a favor, if you would let me know down in the comments below, what's one financial lesson you wish you had learned sooner? I personally wish I would have learned very early on how important it is to start and build a 401k or some other investment account. Because I started late. Well, I didn't start late, but I used my 401k to buy a home. So then I had to start all over, which then means I started late. And so I just wish I knew that sooner. And remember to invest in yourself today so you can make a difference for others tomorrow. And give the video a big thumbs up. Leave a comment down below. Be sure to subscribe. When you subscribe, you should hit the bell so you know when the next video comes out. I thank you so much for stopping by today. Y'all have a great one.